Hello, hello. Welcome, and thanks for joining us today for our 9th FinTech Sandbox Demo Day. I'm Kelly Fryer, Executive Director of FinTech Sandbox, and on behalf of my entire team, I'm excited to welcome you to our events over the next 3 days. With the excitement and incredible global attendance that we had with last year's event, we decided to go even bigger this year, bringing you 2 times as many startups as we ever have. So 3 days, 18 powerhouse startups just for you. Each day will feature 6 entrepreneurs across a broad range of fintech, all solving real-world financial challenges. For those not familiar with FinTech Sandbox, we're a nonprofit that provides a leg up for fintech entrepreneurs around the world by providing them with free access to critical data and resources in order to build their early stage products through our Data Access Residency. We're proud to say that since 2014, nearly 300 startups have been a part of our program, and we've built a truly global collaborative fintech community. Demo Day is an opportunity for FinTech Sandbox to bring this community together and feature a few of the incredible startups that have come through our program recently, and to showcase the products they've built and grown with access to data from FinTech Sandbox's amazing 40 data partners who provide data and infrastructure for free to some of the top fintechs in the ecosystem, as you'll see today. Last year, FinTech Sandbox's Data Access Residency saved an estimated $5 million in data costs for our startup founders through our mission of making entrepreneurship more accessible and to remove major barriers from launching a fintech product. Before we dive into the show, I want to say a very big thank you to our sponsors. As a nonprofit, we wouldn't be able to host events like this or support as many entrepreneurs as we do without you. If you'd like to partner with FinTech Sandbox and help us build the future, please reach out to our team. We'd love to chat with you. Now, before we get started with the demos, a few quick housekeeping and logistics on our event platform here. First, feel free to say hi and introduce yourself in the chat on the right-hand side of your screen. And you can also see profiles of each startup in the startup tab up at the top. We have 6 demos in store for you today. Each one will present for 6 minutes, including showcasing their product and how it actually works. While they're presenting, someone from each company will be on hand to answer typed Q&A. So feel free to add in questions via the Q&A tab on the right hand of your panel. Just make sure to include which company the question is for so that we direct it to the right team. There's also a poll tab that we'll use to track interest in each company. So if you'd like to follow up with or connect with a company afterwards, the poll will pop up on your right-hand side, and you'll need to be sure to submit the poll for each company you're interested in talking to. And then in between the demos, you also get to hear insights from fintech, financial services, and innovation leaders on trends going on within the industry and what they're seeing. So today, that includes senior leaders from Fidelity and EY. Okay, enough of the intros. I know you are all ready to see the demos. Our focus for day 1 of our demo days is artificial intelligence and institutional investing. There's been so much talk recently about ChatGPT and AI as it's become a mainstream conversation, but we all know that fintech and financial services have been finding unique ways to utilize AI for years. You'll see startups today taking AI technology and applying it across risk, investment analytics on both the retail and institutional sides, and unstructured text in the most innovative of ways. On the capital market side, you'll hear from founders who know that time is money and investors are constantly looking for better and more efficient ways to build their trading strategies and get an edge. From building no-code algorithmic trading strategies to a more robust view of the thematic investing to real-time market understanding right at your fingertips. These are the latest technologies for investors. And with that, let's kick off with FinTech Sandbox Demo Day.
Hi, I'm Dan Edelman, co-founder and CEO of Popstox. Popstox offers actionable financial social media insights for your business. Social media shapes finance every day, whether it's social swells or even influential voices moving asset prices. Retail investors and institutional investors are using social media to help inform their investment decisions. But social media is unpredictable. It's fragmented, it's fast-paced, and it impacts our lives and businesses in ways that we just can't anticipate. It makes getting at social insights really tough. Furthermore, social insights are slow and manual. It's really hard to find the signal in the noise. I started in social analytics in 2010 for some of the largest brands in the world, and our methods have largely remained unchanged for the last 10 years. Our vision is a world where social media insights are easy, they're fast, they're scalable, and most importantly, they're impactful. We've combined our industry experience with cutting-edge AI to help achieve this vision. And here's the result. That huge block of unstructured text about the Silicon Valley bank crisis has been turned into actionable insights. We actually use these insights to help update banks, startups, venture capital firms, as well as law firms as to what was going on. It was really tough, even if you were glued to Twitter, to cut through political finger pointing and speculation as to what was being discussed in terms of events. But we were able to deliver a lot of value to these depositors who weren't sure if they're going to be made whole. The way it works is we take social media and news data via API, we clean it, we organize it, which is the most difficult part, given the fluidity of language. The same word or phrase can be used in a million different ways, depending on the context. That data is loaded into a dashboard where you can analyze different topics. You can see the sentiment of the conversation. You can understand who the most impactful voices are. You can generate insights, and you can create reports very quickly. We're backed by some world-class investors, including Biz Stone, co-founder of Twitter and Medium, Evan Sharp, co-founder of Pinterest, and Marcus Rex, the former chief technology officer of Linux. So who uses Popstox? Well, there are a lot of different use cases. Companies who are seeking to understand how social news are impacting their business can get a lot of value from us. Whether you're in the C-suite, making business decisions, or informing the board, corporate communications and PR can use us to help with crisis management. Marketing can help understand their brand exposure or their reputation. Investor relations can communicate how social is impacting that company's stock or otherwise. And regulators can even use us to help identify bad actors. Just this past December, the SEC leveled charges against 6 individuals for manipulating the stock market through Twitter. So we've been talking a lot about how the tool works, but let's look at the user interface. Something that we really care about here at Popstox is an easy user interface. Here's the homepage. So you can see this person is looking at stocks on the left, but these could be any topics that matter to you and your business. On the right, we can generate summaries of what's being said very quickly in 10 to 15 seconds. Gives you a great high level as to what's going on that day or that week. You can tunnel into any one of these topics. They all have their own profile pages to get a deeper look. So let's look at JP Morgan. Here's their profile page. So you can see we have a graph that shows you with the columns, the social media exposure, the amount of accounts seeing this ticker on social against their stock price. You can go back historically to any day and see how they were being discussed. And most importantly, you can summarize and understand what's occurring on that day. You can generate these insights in just a few seconds. So on this day, JP Morgan, there were rumors that they were going to buy Silicon Valley Bank. You can see who your top influencers are. You can see what topics people are discussing. You can also see trending and shared news articles. Influencers are increasingly important. They can help sway or create a narrative. So any influencer with a certain level of influence has their own profile page. Let's take a look at Unusual Whales. They're one of the biggest voices in financial social media. They reach about 1.2 million accounts. You can see what other stocks they talk about, what their social feed in a financial context is. You're not seeing their lunch or dinner conversations. You can see what topics they discuss, and you'll be able to see their historical performance against any asset that they previously messaged. Let's look at some case studies as to how Popstox is being used in day-to-day business. So an investor relations firm saw positive movement in the stock over 2 days, but there was no news. They went to message boards. They thought they understood what was going on, but they needed data and metrics to support their assertions as to why the stock was moving. They used Popstox to aggregate social media data from a bunch of different sources, quickly understand what was being said, and quantify it. And that provided them data-driven support for their assertions that their messaging was reaching the overall retail community. So the advantages to Popstox: you can react to information faster, it's quantifiable, higher quality insights and even recommendations. It's easy to use, it's intuitive, reactive, and fast. What's next for us? Well, we're presenting at Morningstars for Best Emerging FinTech. We're onboarding our first clients, and we're seeking additional enterprise pilots. Please reach out to us with any inquiries, and thank you for your time.
MarketReader allows you to understand why the market is moving in real time. The team, we are a group of professionals that have spent our entire careers dealing with the top institutional investors in the world. We now want to bring hedge fund quality tools directly to millions of users. I personally work for Goldman Sachs, Bridgewater Associates, Nomura Securities, and most recently in my first startup, Exante Data, where we've been serving the top macro investors in the world with high quality data strategy and macro strategy. The problem we're solving is one that we can illustrate with Fred, a financial advisor. He's seeing Silicon Valley Bank moving in his clients' portfolios, but he doesn't know why. He needs to know, is the volatility really unusual? Is it correlated with other assets? Has something specific happened on the calendar? It will take Fred way too long to find these answers through traditional means. What if Fred could ask why Silicon Valley Bank is moving and instantly receive simple, concise answers? The answer to the question, MarketReader could deliver already on Wednesday night when this whole banking turmoil started. MarketReader immediately detected that the unusual volatility in Silicon Valley Bank had to do with a failed equity offering and losses on its bond portfolio, way before the whole market started to move on it. Fred could have alerted his clients about Silicon Valley Bank before they heard about it elsewhere. He no longer has to watch every asset in his client portfolios because MarketReader is watching them for him. MarketReader also allows users like Fred to stay ahead using custom alerts for assets on his clients' watch lists. Essentially, Fred knows what is happening and why as it happens. MarketReader looks at the full picture of what's happening in the market. We have a very holistic approach to understanding price action, embedding news, social media, specific events on the calendar, and we use a high-frequency approach where we analyze volatility in a very precise way that allows us to draw causal inference. We really have a system here that is at par or better than the systems that are used by the most sophisticated investors and traders in the world. In addition to the high-frequency analysis, we can also use ChatGPT technology to summarize the content and the conclusions in the frequency that the user wants. It could be a daily summary, weekly summary. This technology really allows to present complex material in an easy-to-digest way, and it can be very powerful for that perspective. Our system is watching 11,000 financial instruments, and we analyze all those systems and all those instruments in parallel. And that allows us to draw very sophisticated and complex conclusions. But obviously, it is this data system that needs to be fast, and we've built it to allow this parallel processing. We have raised more than $4 million at this point. We have 10 employees, and our system is live. We're very excited to allow beta users in Q2, and we are going to launch for full-on end users in Q3. and we're expecting a Series A in Q4. In terms of clients, we can have both end user clients, could be from asset managers or financial advisors, and we would also like to have enterprise clients, and we certainly would like your introductions and connections in that regard. It could be either through brokerages, news organizations that would like to have the insights from MarketReader through an API. And finally, I would like to say thank you to the FinTech Sandbox. Their network of data providers can be extremely helpful for startup companies like ours. Thank you.
Hello, with Theia Insights, we build factual AI for finance. The world is changing fast. AI is bringing about another revolution in the financial industry. The challenge is that generative AI gives the 90% answer and finance demands 100% accuracy. And generative AI is one small part of the bigger challenge we're facing, that we're in the age of confusion, with more data to consume every day and little time to make sense of it at all. What if you could cut through the confusion? What if you could see relevant information clearly and generate pertinent financial research with the ease of ChatGPT? And this is our vision, to bring everyone from confusion to clarity. Theia is the goddess of sight. We distill knowledge from the financial data ecosystem so that you can see the market clearly. We are building a new knowledge distillation AI, training fact-adapt Theia large language model for finance and distilling information into a dynamic knowledge graph, separating signal from noise. This technology trains a large language model adaptable to up-to-date information. It performs self-supervised knowledge graph distillation from both large language model and raw data. It combines NLP with financial mathematics research. It is trustworthy, does not hallucinate. It provides you with perspectives, zooming both in and out, and it generates clear content in language, tables, and graphs. Our technology provides a solution to financial insights generation. The system takes a large amount of numerical and language data from multiple sources, synthesize the information to generate clear and timely insights. Our dynamic knowledge graph allows you to see who does what by how much dynamically, to decompose price movements into market and fine-grained vertical factors, to observe the emergence of new trends and connections to news events, to see the evidence trail from raw data, and to generate clear content with text and charts in multiple output formats. So let me give you a demo, a tour of what we have built so far. One of the uniqueness of Theia Insights is that we give you a view where you can see everything everywhere all at once. So here is a global view of the industry vertical taxonomy that emerged naturally from data that we are showing you here is 4 levels of industry verticals. And not only can you see all of the industry verticals that exist right now, you can also see how each vertical moves in terms of its pure price on a daily basis. And another way to see everything, everyone, all at once is that we provide what we call Theia Star Map, which shows the volume and price movements and pure price return on a daily basis on all of our verticals. And you can hover onto any of these bubbles and see the pure return on a day. So for example, here's an example of immunology, and here's another example of semiconductors and processors. Now that you have had a feel about how the economy and how the market is performing overall, you might want to dive deeper into one of this particular vertical. And so let's try this, and we dive deeper into semiconductor. So you can search in our search bar of a vertical or a company, let's say semiconductor. And from there, you can see the price movements of semiconductor, this particular vertical, with different types of weighting over different types of time frame. For example, 1 year, 6 months, or 3 months. Not only can you see the price movements of this vertical, you can also see what adjacent industry and theme exposure that semiconductor have. What this means is that here you can see that the majority of companies who are in semiconductor is in the broader industry sector of electronics and IT. However, it is also involved in industrial business and transportation. And if you go a little bit deeper into a more fine-grained vertical, you can see that adjacent to semiconductor and processors, the most common other vertical that these companies are engaged in, including telecommunications and internet technology, computer hardware, software, automotive, and gaming. And then you can dive even deeper into the companies that are engaged in semiconductor. So you can browse and go into detail of any of these companies to see that these are the companies that are engaged in semiconductor, but also what else are they doing? So here you can see the companies and the top 3 industry verticals that they are engaged in. And from this information, you can then generate, here is an example, you can generate timely and reliable report of your research in multiple formats, including text and charts. So we are at the center of 3 rapidly growing markets, including generative AI and AI in general, financial data, and financial analytics. And our model and data serves a wide range of customers, including investment management and advisors, consulting and government, and media, academia, and retail. We started at the beginning of 2022, and in the past year, we have built our MVP models and launched our research platform in closed beta, and we have gained recognition by industry leaders such as NASDAQ. In 2023 and 2024, we plan to focus both on fundamental AI research as well as product development and sales. Right now, we are seeking partners who know the space and have the ability to accelerate our ambitions of becoming the premier AI technology for finance. Thank you, and we welcome your questions and comments.
Hi, my name's Jason Furtado. I was the founder and CEO of Shoobx. Shoobx was an equity management platform for the innovation ecosystem, helping companies from formation to exit and making sure that companies could raise capital with less friction. Recently, we were acquired by Fidelity Investments, and we're excited to see what that future holds for us. And today, I'd like to share a little bit about our perspective on the fundraising process, which was near and dear to our hearts, and how it's broken. We believe that there should be a better way for companies to raise capital that would be helpful to everyone in the ecosystem. If you have raised an institutional round of funding, this is probably going to sound familiar. But after a term sheet is signed and you've done all that great work as an entrepreneur and you feel like the deal is done, somehow some number of weeks or even months pass before the deal is finalized. And at the end of that process, you got a bill, and that bill is generally higher than you might expect. That time that gets lost, that could be spent building a better business, and that money could be spent hiring some more engineers. So it just feels like there should be a better way. So today I want to chat about, hey, what are a couple ways and a couple ideas on how that could change and how that could improve. So one thing is entrepreneurs need to get smart about that process before they dive in. Take the time to understand the basis of equity. Too often entrepreneurs don't actually understand what they've signed up for. And if they can't really engage in the conversation and they can't ask the right questions of the attorneys that are executing the deal, it ends up being the attorneys kind of off on the side doing their typical thing. And that can lead to some time wasting there. And make sure that you have tough conversations early, right? Getting on the same page with your investors and your lawyer that if there's agreement that you're trying to do a middle of the road deal and you can agree on a timeline that makes sense, that can help manage the process. You really want to get ahead of that. And at the end of the day, the attorneys and the investors, everyone wants to get back to that company being successful and getting back to work. One thing to consider are electronic platforms that can help streamline the process and cut out some of the waste of time and resources, and encouraging your attorneys to make sure that they're doing their homework and making sure that they're serving you well. And then to also finally think about the long game. At the end of the day, it's better for entrepreneurs, investors, and lawyers to operate in a more modern and more streamlined manner. And I believe there are solutions out there that can help move that process forward. So I hope everyone out there is able to continue to move forward with their businesses and become super successful. So I appreciate all your time today and best of luck. And thanks so much.
Hi, I'm Sony Gabriel, the CEO and co-founder of TRaiCE. Thank you for this opportunity to present TRaiCE, an automated business risk monitoring platform to help lenders detect risk early through daily monitoring. To set the context, the global commercial lending market is expected to touch $31 trillion by 2030 from the current $10 trillion, growing at around 13% CAGR. However, delinquencies are also on the rise. The US commercial lending market was worth $2.8 trillion in 2022, with historically low delinquencies of $31 billion, roughly 1.1%. But delinquencies are predicted to rise to $168 billion in 2023, according to Moody's, a 5% increase. And this makes early risk monitoring even more critical to prevent portfolio losses. But did you know that 90% of all the data generated on a business is unstructured? Yet, lenders make decisions primarily using structured data, which is only 10% of the data on a business, giving us a problem statement that current portfolio monitoring systems largely ignore unstructured data that contain leading signals of business distress. At TRaiCE, we solve this by analyzing and condensing the unstructured data of a business into a numerical index called the Business Sentiment Index, or the BSI. With the BSI, TRaiCE helps business lenders spot problems and prevent losses, make better lending decisions leveraging unstructured data, take explainable decisions via actionable alerts, and cut research time with automation. TRaiCE connects to the publicly available unstructured data sources to compute the BSI as a first step. The world APIs listed are illustrative, and the BSI computation is source agnostic. If additional APIs are available, we can augment the BSI with insights from that. And TRaiCE is capable of processing 20 plus global languages in addition to English. And it's a B2B SaaS product, accessed via a web portal or API, and supports both cloud and on-prem deployment. As the next step, TRaiCE can compute an early warning risk index, or EWR, by combining the BSI with financials. So essentially monitoring all the financial and non-financial data points on a business. Let me walk you through how a business lender would use TRaiCE for portfolio risk monitoring. The typical user would be a portfolio risk manager or a chief credit officer. They would access TRaiCE via the application's login page to enter the details of the businesses to be monitored. By clicking the settings tab, they can see the business management section from where they can add a business or bulk import a list of businesses. Once added, it takes 24 hours for TRaiCE to generate historical daily BSI values and trigger the daily ongoing BSI generation. The only information needed for a business are its legal name, the full address, and as all of the information is optional. By going to the dashboard, we see three key measures that summarizes the portfolio: a distribution of the most up-to-date watch levels for all the businesses in the portfolio, the top negative news contributing to the BSI of the riskiest businesses, rank ordering of all the businesses in their descending order of risk of BSI. We are in the process of developing a blended score or the early warning risk with our FinTech Sandbox data partners, Equifax and Experian. When that is ready, this application UI will also include EWR information in addition to the BSI. Clicking on the business name will navigate to the health page, displays the most up-to-date snapshot containing the index, the watch level, top negative articles explaining the current index value. You can also see the index trends for the last 12 months. And though the company went into bankruptcy around October of 2022, you can see the index trending lower from as early as May 2022 when this company had an attorney general investigation. Scrolling below, we can see the red flags and their trends for the last 12-month period, sentiments, and other insights. For explainability, the health page also displays all the articles and media sources that contribute to the BSI insights with a hyperlink to the media source. Clicking on the Analytics tab displays the BSI trend as a time series for all the portfolio businesses over a period. Here we are seeing the filtered view with the BSI history of two businesses. Pink Energy filed for bankruptcy in October of 2022, but it saw a BSI plunge for several months back in November of 2020. Greensill filed for bankruptcy around March of 2021, but even 9 months prior to it, we detected trouble with the BSI plunging by over 20 points. Our observation is that when the TRaiCE BSI dips significantly for a business and stays at that value for months, unless the root cause is addressed, this is a warning of things to come. Let me take you through a closer look of what transpired with Greensill and how TRaiCE would have alerted the user. As you can see, in March and April of 2020, there was mixed signals coming in the media through sentiment index that's positive and looking healthy. However, in May and June of 2020, there were a lot of negative news that came tumbling, including instances of red flags such as accounting misconduct, mounting client issues, inviting investor scrutiny. However, there was more positivity in August of 2020 and onwards, though the red flags that were reported earlier were not addressed. The BSI fell again in February of 2021 before Greensill eventually filed for bankruptcy in March of 2021. As you can see, TRaiCE provides a daily trend of the risk score along with red flags, helping us predict the BSI trends in the next few months, providing users with data elements to make actionable decisions. We are thankful to our data and business partners that include Equifax, Experian, Microsoft Azure, Google Cloud, and the FinTech Sandbox. Our current GTM strategy is executed through strategic partners, like our advisors who are banking veterans, cloud hyperscalers like Azure Marketplace and API hubs. We are also working with strategic sales partners and technology alliance partners. In terms of traction, we have 2 paying clients, one in the US and one in India. We also have many ongoing pilot discussions. We have signed sales partners for the US, MENA, and UK regions recently. Finally, our ask is access to industry connections that could benefit from TRaiCE and partnerships where TRaiCE can complement their offerings, and together we can add more value to our customers. And that brings me to the end of this presentation. Thank you so much for listening. We would love to hear from you.
Hope you've been enjoying the pitches so far. We've seen emerging and unique applications of AI and analytics put to work across the capital markets and financial systems. We still have 2 more incredible demos for you to come. Reminder, if you haven't already been, be sure to check out the polls tab if you'd like to follow up with a specific team and learn more. We open a poll during each pitch if you'd like to connect afterwards with any of the companies. You're also welcome to ask questions in the Q&A tab. Just note which company you're asking so we direct it to the right team. Okay, up next, our longtime friends at EY have shared this video with their thoughts on what you can expect from the M&A landscape through the rest of 2023. After that, we'll have our final 2 pitches for today from the great teams at CloudStrat and then Scribe. Enjoy the videos and the rest of today's pitches.
This is real-time business. Volatility resulted in a significant slowdown in M&A activity. Many are wondering what's ahead. For more on this, we're joined by Sid Khosla, EY Financial Services Strategy and Transactions Leader. Sid, what can we expect?
Look, we're coming off a very, very strong M&A market in the last few years. And the more recent months have had some economic uncertainty, volatile markets, as users rightfully said. And so, we're seeing a little bit of a pause in the market. Having said that, I mean, financial institutions have the strongest balance sheets they've ever had, and growth still remains a critical question. We ran a CEO Outlook survey, and 61% of respondents in that survey said they're going to enhance their investments on acquisitions over the course of 2023. So, I'd say 2023 is going to be a year of where M&A is going to be back. I think it's going to be a much more dynamic market. It's probably not going to be the same levels as the past few years, but still a very strategic transaction market to come in 2023.
So what subsectors may see the greatest interest in M&A?
I think it's going to be across all sectors, but the two that stand out to me are one, anything related to technology, so especially the FinTech sector. I think we're going to see a lot of interest in wealth tech firms, insurance tech firms that focus on making institutions much more efficient, as well as help growth in certain segments of the market. And then you can't really talk about M&A without talking about private equity. It's been a strong private equity market in the last few years. There's a pause going on right now, especially driven by where some of the interest rates are and other conditions. But I think that private equity is going to start leaning in some point in early 23.
What does all of this mean for financial services?
Institutions would need to balance the preservation of capital in these uncertain times with the continued mindset of growing. And that's a tough thing to do. So I think there's going to be a lot of focus on reclarifying where competitive advantage lies for these institutions, and that's where we're helping a lot of our clients in, just clarifying what role do they want to play in the ecosystem. And then I think it's going to unlock some inorganic avenues of realizing those strategies, whether that's divestitures, acquisitions, joint ventures, and frankly, even partnerships. I always say partnerships are the new M&A, and that's something got to look out for.
Some great insights there. Thanks, Sid. This is Real-Time Business.
Hello, I'm Yafim Landa, the founder of CloudStrat.com, which is a platform that lets you build, backtest, and deploy systematic trading strategies. In case you're not familiar with them, systematic trading strategies use predefined rules to send orders to the market. For example, let's say you want to trade companies using their revenues. When the company's revenues come out, you want to see if they're increasing or decreasing. And if they're increasing, you want to buy the stock. And if they're increasing, you want to sell the stock. These kinds of systematic trading strategies are used by a lot of different institutions, including pension funds, hedge funds, wealth managers, and banks. They're very popular, and they're only growing in volume, becoming more and more popular. The problem is it's very hard to create these strategies. If you want to build them now, you have to write a lot of code. It's really hard, and there's just no good tools to do this. And the tools that exist are only for very technically, basically for engineers. In fact, if let's say you're a pension fund, the easiest thing for you to do is to actually ask a bank to create a strategy for you. So this is how it would look like. You talk to the bank about your idea, you discuss it, and then eventually someone at the bank writes a lot of code. A few different people implement the strategy so that it matches to make sure that it's correct. And then you also have to describe it in a document for the client to sign. So that you have to also write it in English. And then someone at the bank executes the orders. A trader or a system sends orders to the market, and that's how your strategy actually is deployed. Now, one of the problems is if you like a bank's idea, you have to use their implementation and their execution. You can't really use one bank's idea and implementation and send orders to another bank. That doesn't really make sense. And what we've been seeing a lot is that clients actually don't want to share their ideas with the bank. They want to implement the strategy themselves. They just want to send the bank the flow, send them orders. And so let's say you have an idea, you want to implement it. This is really hard because to implement it, you need to talk to engineers. If you're a trader, there's a lot of overhead in talking to the engineers. They kind of have different skill sets, and it's not very easy. And then to trade it, that's also very hard because you can't do it yourself. You need to send the orders to a bank for them to execute it. Ideally, what we want to see is actually if you're a trader and you want to build a systematic trading strategy, you shouldn't have to talk to anyone. You basically should be able to implement it without talking to any engineers. And then once it's implemented, you test it. And when you're ready to execute it, you can just execute it with any bank. You don't have to execute it with the bank that told you about the idea. And so that's what CloudStrat is. It's a no-code solution to go from an idea to a strategy. And this is what strategies look like in CloudStrat. You can connect blocks together, and basically that's how you create it. And I'm going to show you how to do that now. So here's the strategy editor. We're going to start by adding stock prices to the canvas. And now what we can do is go to the block menu and see all the blocks that we can use. And these are blocks that we created, but also blocks that you can create yourself as a user. These are called custom blocks. And I'll show you one now, actually. I created a block called Trend Detector. And I'm going to add it to the canvas. Now, we want to connect the prices to the trend detector so they can look for trends. I'm going to choose the price over here. Now, depending on whether the price is going up or down, we're going to do, if the price is going up, we're going to buy. And if the price is going down, we're going to sell. We're going to add 2 checkpoints to that. Connect them to the trend detector. Now, the top checkpoint is going to be when the price is trending up. We're going to set a filter so that it only works when the price is, when this is trending up is true. And the bottom one is going to be when it's trending down. So the next one is we're going to set a filter when it's only trending down. When it's trending down is false. Now we're going to move them around a little bit and add the final block, trade execution, and the strategy looks like this. So now how do you know that it's correct? Well, we created a debugger to let you go through the strategy one message at a time. So right now you can see that price and volume is going to publish prices for Tesla. And it's going to go to the trend detector. Now, this is a very useful tool, and I can talk about this for a long time, but I'm just going to show you quickly how it works. But this is how it looks like when you're in the middle of it. You can see your results on the left, the profit and loss, the current positions, and on the right, you can see what's happening at any moment in time. You can have charts, a lot of different things. It's a very useful thing. Once you're done debugging your strategy, the next step is to actually run a backtest. And you can run a backtest in the cloud as fast as possible. And this is what the results look like. Now, I want to show you how to create a custom block too. You can group a set of blocks, click on Blockify, which creates a new block. This is how I created the trend detector that you saw. There's the ability to write blocks in Python for users who are more advanced. We also tried to train ChatGPT to create blocks, and it can actually create strategies, which is kind of exciting. That's it. Thank you for watching my presentation.
Hey everyone, my name is Rob, co-founder and CEO of Scribe. We are a company data platform powered by research-based AI. Today, I'm going to talk to you about unlocking economic growth. In mid-2018, I was sitting at my desk at Barclays, where my job was to analyze whether companies would be able to repay money they'd borrowed. I realized that in the 7 years I'd been there, this process hadn't changed at all. Even worse, it was taking way too long. So in an ideal world, this corporate lending process takes maybe 2-3 weeks, but the reality is much worse. Data entry, Q&A, back and forth, ultimately painful processes. Let me give you an example. We had one existing client wait 3 months for a simple drawdown request. Now, clearly, this is painful for both banks and the clients that they end up losing. So we know that banks miss significant opportunities to serve their clients due to lengthy processes and abandoned requests. So when I say significant, this is what I mean. On average, each bank misses out on $4.5 billion of revenues every year. That's each bank every year. This is due to the fact that 1 in 5 requests are abandoned because it's taking too long. This isn't just a stat. I saw this all the time, and I was part of that problem. It's not just banks too. Funds waste thousands of hours every year chasing irrelevant opportunities, and the companies they're chasing are finding it harder than ever to fundraise. It's clear that organizations can move faster. That's why we're redefining the way that we think about company data. Imagine with one click, you have everything you need to make a fast decision. Let me show you our solution. So we take scanned PDF financials, and we use computer vision to extract all relevant information. We use a combination of natural language processing technologies to auto-populate your existing financial model before detecting and tagging relevant textual information. This is fed to our natural language generation engine that writes analysis. My co-founder and CTO, Emmanuel, has a PhD in AI with significant experience leading research activity using advanced machine learning technologies. We're using research that was only recently published straight from the lab. This is deeply innovative for the industry. So why use Scribe? So with our technology, banks will save up to £40 million annually. Funds will save 10 hours a week on admin, allowing them to move faster. Founders will raise 10 times faster with a 25% response rate received so far. So let me show you what the platform looks like. This is what our clients are using every day. This is the product I wish I had had when I was in banking. So on the left-hand side, we see the financial model, and on the right-hand side, we see the original doc with all the numbers clearly highlighted. This is an industry first for private companies. Lenders and investors are using this data for company discovery, so searching by revenue size, industry. All of the data is in our platform seconds after publication. So our platform goes beyond financial data, covering who has invested in these companies too. Founders can use this data set of over 150,000 angel investors, so by ticket size, to help find relevant investors for their startups. Funds are using it to benchmark valuations and to spot the next unicorn. All the data that we have is also API first, meaning our clients can embed the data into their own internal platforms and CRMs. They can also leverage our financial spreading technology on their own privately held financial information. We have product and sales momentum, and we're now working with over 100 organizations, including founders, funds, and lenders. Our go-to-market strategy covers those 3 distinct groups: founders, funds, and lenders. We're currently generating revenue with organizations that are easier to sell to, while building trust with banks to solve some of their biggest headaches. We sit at the intersection of automation and insight. So without being reliant on thousands of offshore staff to plug numbers into our platform, we're able to deliver insight that's fast, accurate, and fully explainable. But finance is really just the start. Ultimately, we want to help all companies to understand their clients and competitors. In an age of data saturation and unconstrained generative AI, unbiased, explainable insight will be essential for decision making. If you're interested in learning more or would like to try out our platform, just add me on LinkedIn. Thank you very much for listening.
As you can see, there's powerful financial products being built from AI and emerging investing technologies, and this was just a glimpse of it. Congrats and huge round of applause for the incredible 6 companies you saw present today and the powerful products they've built so far. And to Fidelity Investments and Sid from EY for sharing their industry insights with us today. If you're a fintech entrepreneur like these folks looking for data access or help getting off the ground, submit an application to FinTech Sandbox's Data Access Residency. We accept companies on a rolling basis and are always admitting new startups to our program. Be sure to join us tomorrow and Thursday for even more demos. Tomorrow we'll focus on consumer and personal finance, and then Thursday we'll focus on SMBs and financial infrastructure. Same time, same place, 11 a.m. Eastern at this exact same event link. Also, again, thank you to our FinTech Sandbox sponsors for generously supporting our entrepreneurs, our organization in this event. And of course, thank you to our data partners for fueling FinTech products and working with us to push innovation forward. Have a great afternoon, everybody. See you all back here again tomorrow at 11 a.m. Eastern for even more demos.